Imagine a company that manufactures a product at a cost of rupees 10,000 and sells it for rupees 1 lakh. A tremendous profit. Now suppose some of these products remain unsold. So the common sense tells us that even if these leftover products are sold at a discount, say for rupees 50,000 or 40,000 rupees, the company would still make a considerable profit. However, what if I told you that this company doesn't sell these unsold items at a discount? Instead, it burns them. Which company is this? What products does it make? And most importantly, why on earth does it choose to burn its products instead of selling them? But before we find the answers to these questions, let me raise one more important question. What is the single most important quality for any business, the one that makes it an excellent business? And according to Warren Buffett, it is pricing power. It means that even if a company raises its products' prices, customers would still buy from them. This can be due to a monopoly product or a strong brand loyalty from the customers towards the company's products. And that is precisely why Warren Buffett's investment portfolio includes a significant portion of the shares of a company called Apple. Simply because Apple is an excellent example of pricing power. Despite charging significantly higher prices for their products as compared to their actual cost of production, their sales remain strong. In India too, there are companies which enjoy substantial pricing power. For example, a company called Page Industries sells its products under the brand Jockey at premium prices. ITC continuously increases cigarette prices, but it doesn't affect their sales. Vedant Fashions, under the brand Manyavar, sells its wedding collection without ever offering any discounts. So please note that these are not any recommendations to buy the shares of any of these companies. You should always consult your investment advisor or conduct your due diligence and proper fundamental analysis before making any investment decision. Okay, now let me ask you a question. Can you guess the price of this bag which is shown on your screen? 1,000, 2,000, 3,000, 5,000 or 10,000 rupees? Well, the actual cost of making this bag might be around that range only, but if you want to purchase it, then you will have to pay 3,65,000 rupees. Now you might be wondering, one can set any price, but who is going to buy such products at such high prices? Now before we answer that, let me show you the list of the world's top 10 richest persons. 9 of them are from the US and only one, Bernard Arnault and family, is from France, that is non-US, and he is ranking second, meaning his net worth is more than that of Amazon's Jeff Bezos, Oracle's Larry Ellison, Microsoft's Bill Gates, the world famous investor Warren Buffett, Facebook's Mark Zuckerberg, Google's Larry Page and Sergey Brin, and Microsoft's Steve Ballmer. He is behind only one person, that is Elon Musk. And his company manufactures luxury fashion goods under the brand Louis Vuitton, like this bag. And if the owner of the company selling these bags is the world's second richest person, it obviously means that these expensive bags also do sell and sell quite well. And in case some of their products don't sell at such high prices, then the obvious choice for the company should be to sell them at a discount, as that would still be profitable. In fact, profits would be quite substantial. But this company doesn't sell its unsold products at a discount. Instead, it burns them. Although when the act of burning started receiving significant criticism, nowadays they cut and tear the products apart to destroy them. so the same can be recycled in some way. But the bigger question is, why do they destroy these products? It is because the people who buy Louis Vuitton products do so primarily to fulfill their self-esteem needs, to showcase these products as status symbols. When someone, say a lady, goes to a party with such a bag, she wants to show off that she is using a product worth 3,65,000 rupees. Now just imagine if the same product starts getting sold at a discount in the market, let's say for rupees 2 lakhs or rupees 1 lakh, the value of all the products owned by those who purchased it for 3,65,000 rupees would also decline in the market. And that is precisely why this company never sells its products at a discount. In fact, the higher the price they charge, the more the value of the product. And that is true brand loyalty. That is true pricing power. So if you can also find a company with such pricing power and invest in it, provided its share price should not be very high as compared to its valuation, then it could be a good investment opportunity with a potential for significant returns. Alternatively, you could look for a company that challenges such pricing power companies with some unique differentiation. For example, Pidilite's product Fevicol has immense brand loyalty, we all know that, and holds approximately 70% market share in the adhesive segment. However, there is a small company called Jyoti Resin which has launched a product named Euro 7000 at a similar price to that of Fevicol. And since they couldn't afford as much advertising as Pidilite, they chose an altogether different strategy. They started incentivizing carpenters to buy their products. So while end consumers still prefer Fevicol, the carpenters would prefer to buy Euro 7000. And since its quality and price are comparable to that of Fevicol, consumers also would not have any major objections. And as a result, Euro 7000 has become the second highest selling adhesive, only after Fevicol. In fact, till 2020, it was a penny stock. But today, the stock of Jyoti Resin trades at around 1500 rupees. So the underlying message is, as investors, we should always keep our ears and eyes open. Wishing you all happy learning and happy investing. Thank you and Jai Hind.